The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here on the 6th of December, Tuesday. We're looking at the Dow down 144 at 33,806, just underneath the 14-period exponential moving average. As you can see, the green 9-period moving average is still above the 14, so this is still positive. MACD has turned down, stochastic has turned down under 80% and 75%. The little gray line over there is the relative strength has been turning down for about a week or so. And so basically what we're looking at is this consolidation that I've been talking about for some time now. In fact, let me do this. I wasn't going to do that, but once I'm talking about it, I may as well just do it right now. I mentioned a little while ago that back, I think it was on the 11th of November, 11th of November, I had said a particular technique that I developed, a long time ago. In fact, this goes back to, I think, 1984. And what I've been looking at is how markets make internal lows and then residual lows. And sometimes that could be even 6 months apart. You remember there was a period back in the 1990s where I think it was in 92, the S&P or the semiconductor made a low, but back in 93, that was October, and then in March of the following year, the other one made a low, but the original one didn't. And that got me thinking about what I call the internal low and the residual low. So it's like an earthquake and an aftershock. Well, an aftershock, you'll see how many times you make that internal low, then residual low. Look, basically what happens is I've still to this day don't really know what to call it, but I've called it the Chapman Wave Dark News Cloud Cover. And basically what it is, I use the Dow as for the example, is that at a certain point the market gets oversold. That's the Dow gets overbought. And as it's getting overbought, it's got this, I always have this image in my mind, I guess from the back in the days when I used to ride a little motorbike. And on those occasions that I used to have a slide, the gravitational push was such that until I hit something substantive, I did not stop. And I used to always add up as it was. Oh, there goes the mirror. There goes the rubber on the accelerator. There goes and I would add it up as I was sliding along, and eventually it would stop. But the start of the crash itself was as I hit the ground, but the momentum kept me going. So that's what I've always thought of. So you get the internal low and then the residual low. And in this case, the residual low could be, if it's an earthquake, it could be worse than the original earthquake, but it could be much better. But I like to look at it in the market as something that's happening, and then there's a bounce, and all the internals have already made their technical low. All that's happening is it's an emotional low. So on a purely psychological level, which I'm not qualified to talk about, although for most of us in the market, we've developed a really strong sense of psychology, because that's what we have to handle every day. It's almost as if there's an impact that's really forceful, but then the emotional part of it has to be resolved. So here we go. Internal low, residual low, that's how the Dow made that lower low and had that screaming move to the upside. Fortunately, we were long from the day after the low. We were long a few days before, and each time we kept taking a little bit of profit or a tiny loss, and eventually we got back in, and we've had that for the day after the low, which has been a fabulous move. And then we also got the 3 times long. On this move up, I had said back on the 11th of November that I believe that we've made some kind of a dark news cloud cover. And all that says is that at this particular point, the market, and once again, I'm talking about the Dow, is starting to appreciate that something's happening there that is a little bit more than just a news event that you can shrug off. from this move on the downside, look in the gray rectangle, that moved to the downside, the rectangle there, gray moved to the downside, gray moved to the, okay, this one only made a peak on August the 17th and then tumbled. Remember, that's where we had already been, we went short the Dow. So this is what I'm looking at right here, that we've made an internal, on the upside, it's, I don't want to even use the word internal low and residual, internal high and residual high, because it works on a slightly different basis. But what it does is, it says this entire rectangle here, we're now in a phase that says the market is taking news much more seriously, negative news much more seriously. So dark news, Chapman wave dark news cloud cover means that the market is taking news, it's ignoring it, and then boom, it's very important. We're in the boom stage, but I don't see from the technicals that I'm looking at just at this particular point, the reason why we didn't go short is, or yet I should say, is I still see enough residual strength that this rectangle can go on for a little bit longer with sudden pops to the upside. Don't have to break out by very much, but at least move to the upside. That's the stance I'm taking. Now let's get out of this, because I've explained to you my reasoning for subscribers doing what we're doing right now. And at the same time, I'm not ignoring the fact that the S&P is a lot weaker than the Dow. I just typed that in the wrong place, as I usually do when it comes to the S&P. S&P, oh, that's why. Let me just go back there, INDU, and now I can go to this one, because they're separate charts. There we go. S&P. There. So I'm getting it. Am I going to do this every day? Okay. Look at that. A much deeper pullback from the 4100.51 high I made it 4 sessions ago. And here we are. Why is it not moving to the right? Oh, man. This is frustrating. Space to the right. 0. I'm not sure how that keeps happening. I'm going to go to 8, which I usually do. There it is. Okay, so we're back. So now what we're looking at is the rectangle that I've been saying since early in October. In fact, so late October, early November for the S&P, I said, watch out. I think that we've got a pop going towards the 200-period exponential moving average. How important is that? Well, you'll see how important it is. Look at this. You go over the 200-period moving average, and you pull back. Here you've gone to a peak D. D is the objective in the Chapman wave methodology. You can go to E or F, but D is where you become a little cautious because other things can happen, and it's pulling back. If we close under the big candle, what was it, Thursday, with a low of 3938.58, it closed below 3938, says, uh-oh, we're going into this area here, and that becomes a little bit more serious. Look at the QQQ. QQQ didn't even get to the 200-period moving average, and it's pulling back sharply today, down 1.4%. Dow's only down 0.43%, and the S&P is down 0.85%. So this is a little more serious. You see how it's been struggling, and you can see from the weekly chart that it got out just for a moment last week above the down Chapman wave inside track down channel, and lo and behold, what are we looking at? The IWM, same thing. Got to the 200-period moving average, peak F, and now it's pulling back. And this is the gold again. Gold is now pulling back from the bounce it had. It's up 3 at 1784. I'll come back and I'll show you some very interesting things in the 1-minute chart with all these techniques that I just discussed.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, I want to do this live. I've been having a little fun here. I've changed my modus operandi for the show that I've been doing for 20 years. I don't know, how many shows would that be? I don't know. But in the meantime, so I do a lot more intraday work just to show the techniques. I mean, the fact that it's 1 minute chart makes, is there any way to tell this is a 1 minute chart and maybe not a daily chart or a monthly or a yearly chart? No, a chart is a chart. Price is a fractal of human nature, and here we are. So the technique that I've always discussed is, in the Chapman wave, we look for identify a low bar. I'm not even telling you what we're looking at right now. And every successively higher bar, as long as it takes out your original starting point, gets alphabetized sequentially, A through the letter G, but it's that fourth highest peak, peak D, where other things can happen. Your objective in the Chapman wave is to get from a buy signal upgraded to a buy mode, which says you should go to at least a D. And then other things can happen. There are techniques for that. Sometimes you have to do nothing. You just follow one or two particular tools, technical tools. You're doing nothing but following. Well, look at this. This is a natural gas. We had a fabulous bounce recently, which we participated in. Then we got out. We've been out waiting when I almost said, let's go long today. But to catch a falling knife means that you need a lot more veracity in the technical charts. And I just felt that even if there is a bounce in natural gas, I don't yet see the impetus for a bounce with a gap up the following day and a gap up the next day. That's kind of what you want. It's almost how we got to that leg D so quickly in the daily chart. But it was starting to improve to a certain extent. So we made a low at about $5, and in the natural gas, $5.40. And I'm just getting from right here at about 8:40 this morning. Look what happened. It bounces the first bar. If it has a higher high than the left side and a lower low, that can't be, if that's the low bar that you're wanting to use, that can't be A, because A needs to make a trough first. You can't just have it a bounce if you're coming off a low. So this A would have been wrong. But the very next bar had a higher low. Now you've got a trough. Now you can start counting the peaks. So that goes peak A at the 200-period moving average. You know that the 200-period moving average acts like a magnet, either a repellent or a propellant. Well, lo and behold, it gets repelled right there for 1, 2, 3, 4, 5, 6, 7, 8 bars, and then it pops up and starts leg B. 1 penny higher goes to leg B, and that stays. It's a floating letter that continues until it makes a peak, and it makes a peak a little later. It goes to peak B, and then it pulls back. Well, I had started to draw in a Fibonacci expansion. This one also has a 300%. That's not a Fibonacci number, but I don't know if I think I put it in, and I love the 300% because that stretches the price so much, either on the way down or the way up. That's kind of where you start to stall seriously. Anyway, it pulls back quite sharply, but the starting point low right here at $5.42 at 8:41 this morning. At 8:41 this morning, hasn't been taken out in this pullback, so this is still a viable up mode. At 5.43 at 9:02 this morning, and then it starts to do this. It starts to rally, and all of a sudden, as it crosses the 200-period moving average, one of our tools goes green, and that green stays until it goes to a peak C, pulls back and comes back to do what? To say, hey, whoops, I forgot my hat. Sun's strong out there. I need my hat. So you pick up the hat at the 200-period moving average, and then goes again, a gray peak A because it's under the previous peak C, and then it pulls back just a little bit, and it spirals up to a peak D. Your objective is met. You want to get to a D, but wait a minute. It goes 1, 2, 3, 4, 5 bars, still with a 9-period over the 14-period moving average, way over the 200-period moving average, saying, hey, this is good stuff because it's now acting as a propellant line. And what does it do? It starts a brand new bind. It goes peak A, B, G/C, because there could be an alternate case count, and you're almost at the 300% level. But the MACD is now slightly positive. Stochastic finally gets over the 80% line, and what does it do? It goes to D and a very quick E. When it goes D, very quick E, either you've got a Chapman wave instant restart, but you watch the low below the trough at D, if there is one, and if it takes it out, it says, uh-oh, be careful. So it pulls back, it goes over 300%, it goes to a high of 5.674. This is natural gas. This is a continuous contract. And then it pulls back, and it pulls back to the support at 238. It bounces, goes to a gray A, pulls back, and now here's the pattern that we look for. This is very significant because in the Chapman wave methodology, we're looking at 3 key patterns. 1 is a straight line up or down. 2 is a cup formation. 3 is an arch formation. It could have a combination where it comes down sharply, makes an arch formation, takes out the left side low, and that says, be careful, you get to a 1-to-1 to the downside. We had that earlier on. I'll show you a little later on where we saw that. And on the right side here is where it goes 1 and 2, where it goes up, stops at a certain point, makes a cup or a V-shaped formation, and then takes out the left side high, and that's very positive. But the lowercase h, we call the dreaded h, because if it takes out the left side low, it can go a lot lower. Look what happens. Sometimes it holds steady. It doesn't even take it out, and it forms another little arch, and it goes around and makes a lowercase h that goes to a second arch, which I call the lowercase m. If that m on the right side takes out significant that left side high, left side low, be careful because you can get a 1-to-1 to the downside. So let's watch what's happening in the natural gas, and it goes arch 1, arch 2, lowercase h goes to a lowercase m, takes out the left side low, and then it pulls back, and now it's going to the 200% move, and now it's trying to form some kind of a base in a trough D. And the technicals are weakening, but they're not breaking down yet. So we're going to be watching that yet. The 9-period is still under the 14-period, so it still says it's kind of negative. All right, with that said, let's just quickly do this. Oops, let's not do this. Let's do that. And we're going to go to the E-mini. And how important are the 200-period moving average and peak Ds? Well, look at this. Let me go to this. Look at this beautiful arch. For constantly you're rotating between the arch and the cup, the arch and the cup, the arch and the cup. Look at this beautiful arch. Now you can go to the exact high at 712 or something this morning with a doji candle at about 4,010 this morning in the E-mini. And it rolls over. It makes a little cup formation. First of all, it makes a falling axe. then a cup formation like that, retests. I didn't want to do this before, but I can do it now. Retest the high, and look at this. If I take a vertical, this is your vertical line right here. That's your plumb line. The number of bars on the left might, let's do this over here. We're over there, right? Might, if it takes out the 200 period moving average support, which is tested umpteen times in the last half hour here, that's prior to 7 o'clock. In fact, the last hour and a half, almost 2 hours, it kept failing at that, and then it broke above it, and it's coming back to it. Look, if you test that vertical line, look how strong the technicals, the MACD and stochastic and the on-balance are. Look how weak they are here. So what happens is it makes the dreaded H over there, comes down, tests it, makes another H pattern, fails, and it plummets down using 200 period moving average as a repellent zone. It tries it again, goes to peak C and then a peak D. And it goes 1-to-1 to the downside, goes to a peak C and then a peak D over the 200 period moving average. And then it plummets, and now we are down 31 points in the E-mini. I'll be right.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Remember this pattern we were talking about? Straight line down and then an arch formation that tries to make an M. And if it takes out the left side low, just be careful because that it could go quite sharply down. But we just had that in the E-mini. It went to an arch formation once, lowercase h, held, ran up again, and went to another H. That's the M pattern. And here we are. We're underneath it. Now we're at 39.63. This is where you've got to be a little careful. Why? Because the MACD rallied sharply, and now it's about to cross. It gives room for the MACD to pull down. And the stochastic, though, is a little bit positive. So both of these could deflect lower, but now you're anticipating something that needs to happen to be able to prove a point. At this particular stage, the 9-period moving average is under the 14, and it says just be really careful. Not only that, the market has had a number of rallies that have failed. and it shows you the power of this 200 period moving average. I just want to show you something else. If you go to, typed it in the wrong place. If you go to gold, made a peak C1, C2, it's almost the same pattern. It's the MACD is trying to hold and not deflect lower, rod cross lower, but try to deflect higher. But it's really struggling. The stochastic has the red. That's the slower moving average. That is the 14 period. In this case, 14 period moving average. Hold that's red, and then the green one is the shorter one, and the stochastic is pulling back, but it's not really at this point giving you strength, and the unbalanced volume is very weak. So you got to watch that. This is the gold. But look at these moves. Look at this. Look at the pattern. I just showed you testing the left side and the right side vertical move. First of all, that peak D that was made in gold at 710 this morning. There's a continuous contract. Just kept failing to break to a new high. Look how many times over a period of about 20 minutes or more, it kept going to the high that was made at this peak D at 714 at 1792.7. The MACD was turning down, stochastic was turning down, and then the rally that formed had the MACD deflect lower. It didn't cross positive as the stochastic very briefly went above 80%. And look, the green for the 9-period moving average, it failed. Usually I make these green. I didn't at the time have a chance to make it gray, and then that gray failed, so it goes to B minus. And it didn't. If it went one tick above, I have to call it E or a brand new B that's legitimate. Instead, it failed. A long, narrow rectangle formation can fail if it goes to the high and then comes down and breaks halfway through the midpoint of the rectangle. It can take out the left side low. Well, it did. And then there was this isolated move that had like a single leg to the upside that failed with 4 double tops, and then it pulled back. And then look what happened. Look at this beautiful cup formation just above the 200-period moving average. It didn't even care about the 200-period moving average gold contract. Went to peak A and then a B minus and failed at the double top. Look at the vertical lines, how the stochastic went above 80% briefly and then turned down. Yeah, the MACD was looking kind of okay, but it never went above that left side high. And then all of a sudden, it powered down. And then it made another peak A, B, C, D. And here's your one-to-one. Look at this one-to-one. Remember, I'm always a little conservative when I do one-to-ones. I go from not the neckline. I go from an inside bar. So in this particular case, I went, that should have been an up arrow. I went from that low right there. There's the gold contract at 850 this morning at 1788.6. I went all the way to a P. How quickly can you get to a peak D in such a small move? That's really not very good. It looks like the dreaded H pattern. It goes to 1791. But look at what happened. So I gave this a measured move to the downside. I gave it a measured move, bar symmetry on the right side. But I went to this trough right here. I didn't go to the outside one because you want to be a little conservative at first, and then you can expand it. But it went exactly, look at that measure, look at this move. It went to exactly that low, had a big rebound, failed at a peak C, pulls back, makes the arch formation. I wasn't able to do all the notation here. Arch formation, comes back down, does another one-to-one to the downside, goes to a peak C1, C2, and now gold is only up 2.7, and it's making us yet another arch formation. These patterns repeat over and over. I've just done this live for you. There's nothing, fancy. And what I said was, in the dreaded H pattern, if it goes to a lowercase m because it held the left side low, if it takes out the left side low, watch out. This can keep going down. But you now have to wait for a brand new buy signal because it's negated anything on the left side. Let's see natural gas, where we are in the natural gas. Natural gas, yep, there it is. That's the peak E that was made, and now just making lower lows. The 9 went under the 14 period. Nice action, huh? So here we go, lowercase e, and we'll see if this lowercase h goes to a lowercase m and then takes out that left side low at E, and the target will be 5.52 in the continuous contract on the natural gas. All right, enough with that. Let's get back to our story because we wanted to be looking at everything. I want to go back now to silver. I haven't looked at silver. Silver is trading down a penny at 22.40. It had a big move. The way I'm looking at this at this particular stage is that this has all the action that I would expect, more of a peak F than a peak B. So silver has a much nicer chart formation than gold, but it's done the 1-to-1. Remember, I like to look at this as a sine wave, almost a fulcrum with the midpoint here. Just think of it this way. I'm just going to do this nice and thick so you can see it. That is your fulcrum. It's almost like your 200-period moving average. And what happens is you go from a cup formation to a potential arch formation. And I'll draw it in to say that's kind of what I'd be anticipating after such a spectacular move. Doesn't tell you how, other things will have to tell you how far down you go. But look what's happening. We are in the process of the sine wave going from just like a yo-yo, from the downside, midpoint, propeller shaft, midpoint, goes up to about the same distance and then comes back down to retest. And not only that, it has gone to a leg D in the weekly chart. That's really important. We had a left side, right side price time match, bar symmetry, which said that by the week of the 13th of January, this high that was made, not the high that was made on the 22nd of April, the week of the 22nd at 26.81 in the continuous contract, but the high that was made on the 29th at 24.56. That's an upside target got a few weeks to go. And so far that's in place. And the monthly chart has started to improve because you're finally above the 14-period closing. No, we haven't closed. We're almost closed above the 14-period moving average last month. This month we've gone nicely above it, but we're still, and that price is at 20, right there. It's at 21.74. All right, and we're at 22.40 right now. Okay, next thing I want to look at is, crude oil. No. High-grade copper. High-grade copper is trading, let's see, up 0.02 at 3.82. And what does that tell us? It tells us there's a chance that this move right here with the stochastic only at 72%, the MACD, good but flat, 9-period moving average, very good, nicely over the 14, but that 200-period moving average, look how it's been a hindrance to the breakout. It just doesn't allow it. For 4 sessions, it hasn't been able to really push sharply away to try to test the high that was made, high-grade copper high, back on the 14th of November at 3.96. So that's that copper. And look at the dollar. The dollar is struggling to come off the low. It's up 5 ticks at 105.35. And that 200-period moving average, it's just been sitting around there for the last 3 weeks. It just can't get away from it. It's like a magnet. And there's your peak F in the weekly, and it's gone to a leg D to the downside. There's your key support level in the dollar. I'll be back in a moment. Basil Chapman. Dow's now down 218. S&P's down 44. We'll be right back. Let's go to that E-mini chart as we go into the break.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
I thought I'd just better go on with this because I had a couple of people ask me a couple of questions about it. How low can gold go? Well, it's not a matter how low can it go. It's pulling away from the 200 period moving average, and this peak C1 and then a C2, which says it could have been. The technicals had enough emphasis to say that it could have just popped to a D, but it failed to do that. And it went basically to peak C1, C2, just under that initial high. That's like a peak D. It acts like a D. It's a technique that I developed a long time ago. And now we've gone and we've retested the left side low. So this is that arch formation. And if gold at any point today, if gold at 1783 right now, I'm going to make it just on a very short-term basis. If it breaks 1781 to 1780 support, that's just another thing altogether. But right now, it's just trying to establish some kind of a basis on the positive side. The way it's acting, I would not be surprised if it does go negative. We'll just do this. Look, here's the NG. This is the NG. Remember I said once it went to a sell signal and then a sell mode with that arch going from an H to an M, lowercase m pattern and failing, and not holding the 200 period moving average is now at 5.51, is down 0.07. Oops, there it goes, it's tanking. Oh, I wish I had done this. I wanted to do it before. I was busy talking about other things. So let me just be very strict about what we're doing here. I'm looking at this and I'm saying, this is my midpoint right there. And normally what I would do is I'd grab that left side right there, and I'd say, okay, I'm over here, and it's starting to pull back. I could see a left side, right side bar symmetry with the plumb line at that peak E right there, and it would go to, and I'd make that red. Now, you don't have to have these colors. I have the colors because I'm showing you. In fact, maybe tomorrow I'll just take a naked chart and we'll do that with a naked chart just to show you that the pattern is really what it's geometry. I'm looking at geometry here. And that says that from this particular technique that I use, is there says from this, on a particular identifiable left side peak, I want to draw in an extension to the downside. So I have to go to the bar that I chose. Well, that's the bar that I chose. Oops, that's the bar that I chose for the symmetry on the left side to the right side. But if there was a rally that was a bigger rally and it retested or got close to that high, I use something else. Immediately I say, there's the trough that I want to use for the low, and that's what I would use. So this just says that it's coming down each fib number. Now, at this particular point, I usually say, it's getting a little messy. Let me get rid of these fib numbers. It's working better without. And I say, look, here's your trough of importance, and it's gone so far to a trough F, and the next one is a G/C, which says be careful because it could go to a D. It's just about to go. There it is, G/C. And what does it normally do? It goes to a D, and the D is right on the support line that I was looking at. So we've gone to the D, and the natural reason why I'm doing this is that a number of people said, when are we going to get back for subscribers? When are we going to try to get back to the UNG? And I've said, I'm just holding steady on the sidewalk. I'm watching yet with it, and there it is. So that's that. Let's just go to the ESZ22 to see. Oh, if I've got a, did I put any symmetry in there? I think I've been so busy with all these other things. Now I don't want to just get carried away with this stuff. I want to do the charts as well. Oh, this is what I drew in. I drew in the 1-to-1 to the downside. And that, see the straight line right there, the horizontal line? That was a target. When it went, it held it for 3 bars, and then whoop, it went to a little doji candle, and now it's trying to rally. So now I can say, aha, a little oversold. So the E-mini can start to maybe have a move to the upside right there. Has to cross the 50-period moving average. But this is, I'm calling it A. Stochastic has really gone from way oversold to 69%. That's a good sign, but it's got to be able to sustain it. And I haven't got the 9 crossing the 14. All right, enough of that. Now, number of stocks we wanted to look at. So the question keeps coming in over the last 4 weeks about crude oil, about ExxonMobil. And I've been saying, I think ExxonMobil's topping out. There's a pattern that we look at which basically says that, let me just get it over here, that this sideways action is basically an overbought situation. The word that I'm missing starts with a D, D-A, D-O, D-I, die. Anyway, I'll get the word. But what's happening is rotating through buyers and sellers, but now you're getting more sellers. And I said, be careful, because I think Exxon has made this quadruple top, actually quintuple top in the 114.60 area. And that just, and look at that, the MACD's been deteriorating. Stochastic's now way down 29%. The 9 is about to cross the 14 for the first time in a long time, since it crossed positive way back at about $87 in October. And here it is at 105. It hit 110 as it was turning pink. And here it is at 105 today. And I've been saying I've got a Chapman wave 2-bar reversal in the weekly chart. It's actually a 3-bar reversal. And it just says, be careful. This is the kind of action I see that says that you're bumping. You remember I was talking about my motorbike taking a tumble and seeing all the parts fly off, but it didn't stop until I either gravity said, now you're slowing down, or I hit something. Well, that's what happened here. Gravity says, oh, it's just fading to go. All the impetus is pushing it high, but it can't go higher. Therefore, it's going to be starting to pull back. And there it is. Doji candle in the monthly chart says, be careful now with stocks like an Exxon. Great dividend. Buying it here for the dividend is not good, because your 5% or whatever percent you get, you could see that disappear if Exxon starts to come down even further. Next question I had was, where was it? I saw it. Was it yesterday? Yes. Could you look at FCX? FCX is Freeport McMoran, copper and gold. So this is an alternate count, and I didn't want to spend too much time on it the other day. I did draw in the rectangle to say I believe it's stuck in the rectangle formation. It's gone to a leg E in the weekly chart, which is really very good in that cup formation. And the monthly chart is at a nice leg B, gray leg B. But what's really important is that I'm starting to see a stalling motion in the daily chart. So there's residual strength, but it is an action that says, just be careful, because it looks like it wants to also digest these gains. So within that context, I'm going to put this as the letter G in the Chapman wave methodology, and I'll give you the reasoning. But I can't ignore that it also has an alternate count, G/C. Now, why do I do that? I'm going to type this in. I hope I'm wrong about this one, especially since it's copper. This is Freeport McMoran, copper and gold. This is a really important, this is a key stock in the whole sector. It's commodities, the whole thing to do with Freeport McMoran. But what's really important is that there's a potential, and now I didn't want to type it in before, but now I'm going to type it in. I'm going to put this right across here, like that. I'm not going to make a left side, right side price time match. Maybe I'll do that tomorrow. But what I am going to type in is Chapman wave, Untitled conventional flat base restart to I'll be back and I'll explain it.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, I just had a question. Could I apply this to anything? Yeah, this is a technique. It's not like it's only applicable to one thing. Look, here's the SOXS. That's the 3 times short the SMH, the semis. And look at this. A, what's the objective? If the 200-period moving average acts as support and then a springboard, you can count the peaks to the upside of peak C. And what is your objective? At least a D, but it can go higher. This could be an instant restart, but instead we've got E, and it goes to F, and then it stalls. Down arrow because it stalls right there. And then what do? We do a measured move. We say, wait a minute, what's happening between this high right here, where the technicals were all excellent, and this high right here, where it's gone peak A, peak B, and to only a C. Is that failing? Yeah, it did fail. So now you're getting this double cup formation. So these are all technical. So it gets you in right here where it turns green at about 33.15 or so, and you're out at 30, 34, 33. Hey, not bad, huh? So with that said, that's enough of this. Let's go to the a couple of things we're looking at here. So the volatility index still is It's up 76 cents at 21.51. But look how long it's taken for the UVXY, which is the trading vehicle, to actually do anything. And even here, it's doing nothing. It's at 7.46, up 13 cents. Yes, it is up 1.84%. But look, after the doji candle yesterday, you'd expect it at least to be popping. And that's what I've been saying. It's not a great trading vehicle at all, the UVXY, unless you time it so perfectly. Like if we have a weak session today, and then the technicals are the futures are weak tomorrow, then you'll get your big move to the upside. So the timing is absolutely imperative. Folks, I'll be back with Tom O'Brien later on today. Stay tuned. Got great programming here. Check out my Open Forum, a daily newsletter. And see you a little later on. Guys, same station.